It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. This was what Henry Ford, an American industrialist and founder of the Ford Motor Company, said way back in the 1930s. With almost decades past, this statement can be seen as true until today. Banks have become an indispensable part of our lives. Everyone wants to save their money in a safe and secure place. Gone are the days where we put our money under our mattresses or even under the ground. But what is it that Henry Ford thinks that we are probably better off not knowing how banks work? Welcome to Empire Investing, the channel where we'll be sharing the latest in stock market news, technology, and innovative investment strategies for aspiring millionaires and billionaires. If this is your first time watching our channel, please consider subscribing to see more videos just like this, and let's get started. Banks or financial institutions operate in complicated systems that are hidden from the eyes of the public. Sure, it's a safe place to store your money, but what you don't know is most of the time, banks are cashing out big time. How do they do that? Well, the answer is simple. They use your money when you take out a loan, spend your money, or even by saving it. These could probably explain why bank stocks are an investor's favorite because they profit off of unsuspecting citizens and their hard-earned money without them even knowing. But you're lucky to be watching this because today we'll be talking about the 7 facts banks don't want you to know about your money. Number 1. Every year you lose money. The bank is the best place to keep your money, but has anyone told you that you're losing money every single year when you keep it in the bank? Not because you're spending it, and it's not because you're spending it every day. It's all because of inflation. In economics, inflation is the general increase in the prices of goods and services over time. Because of this, what your $1 can buy today would be a bit higher in the next coming years. Currently, the average rate of inflation in the United States is 2%. When you put your money in a savings or checking account in hopes of staying up with inflation, then you're losing more than you think. If the annual interest rate in the bank is at 0.05%, that would simply mean that you're behind 1.95% of its value per year. Number 2. Banks profit every time you swipe your card. We use our credit cards because it's faster and the most convenient way to pay, rather than taking out your wallet and taking out your cash. With one swipe, your services or products are already paid for. But whenever you use your credit or debit card to make purchases, you would probably know about the processing fees. Processing fees are the total cost charged per transaction. You may not feel like you're being charged for the fees, but actually, the merchant pays the fees. To avoid his profit to come short, he could probably raise the sales price and include the said fees. For example, let's assume that everyone wants to pay using their card and not cash, and you bought a bag worth $500 with your card. If the store is charged 3% on every payment with your card, that would basically mean that they'd have to pay $15 to the bank for giving them the machines to swipe your card. Is the seller happy to pay $15 to the bank for every bag sold? I don't think so. It may seem that he's paying it and you're off the hook, but the seller has already taken that fee accounted for. What you don't know is that the item is actually sold for $485, but is presented to you as $500. The $15 actually covers for the 3% deduction that will go to the bank for every card transaction. Now you might be thinking, that fee is small. Plus, I get incentives the moment I signed up for a credit card. Well, you may be wrong. We all love incentives. Who doesn't? But that's not the case for credit cards. With credit cards, what you most likely don't know is that the interest rate can be adjusted at any time. The average interest rate is around 16%, but your bank can change that and increase it to 17, 18, or even 19%. They can do this modification anytime they want within 15 to 30 days notice. I didn't sign up for this. Remember that long legal text you ignored when you first got your card? Yep, that's where it's located. Especially when you have compound credit card interests. These interests will grow over time, and if you don't pay them off, this could negatively impact you financially. It may seem scary to get yourself a credit card because, like what we talked about earlier, it's for convenience and a part of our daily lives. Just make sure to pay off your debts on time. Number 3. The money in your account is not physical. When you check your account, you will see that your money is there. The numbers add up and the bank has an electronic record of your money, but these are just records. The money you have in the bank is used by the banks to do businesses such as car loans, business loans, and mortgages. You may think that your money is in the bank, but in reality, that money is being used to make money for the bank. A great example of this is the economic depression that happened between 2007 and 2009, the Great Recession. The Great Recession was a global economic downturn that devastated world financial markets as well as the banking and real estate industries. Because of this, millions of people lost their savings, their jobs, and even their homes. People flocked to the banks in a frenzy trying to withdraw their savings, but unfortunately the banks didn't have enough to pay everyone. In theory, banks should be able to pay everyone, but once a crisis occurs and everyone wants to withdraw all at the same time, the money will not be available. Why is that? This is because of a policy called fractional reserve banking. This is a system where only a fraction of the bank deposits are backed by actual cash and is available for withdrawal. But don't worry, it's still safe to put your money in the banks because your money is insured and the government has already placed a safe net in case anything happens to your money. So don't suddenly withdraw your money after this video. Your money is safe. Just remember that the money you put in the bank is not the same as putting it in a piggy bank where you can just break it anytime you need the money. The money you deposited in the bank is making money. It's just not making money for you. Number 4. Bankers' loyalty is always with the bank. There's probably 1 or 2 banker names that suddenly popped in your head. The same bankers who know you by name and guided you ever since you've been with their bank. Even celebrate some milestones in your life. You may have even considered having them as your friend, or you might be friends with one now. Well, the truth is, these bankers aren't actually your friend. Sure, you may have exchanged a high five because of your salary increase, but they're simply just doing their job. And their job is to make sure you stay with them. More often than not, the goal of bankers is to make their customers feel safe. A banker once said that his goal is to make the customers feel safe and consider them as friends. Approaching them with a friendly attitude, winning their trust, and making them feel that he is on their side and not the bank's. Once he knows he's got them in his hands, he's going to introduce them into taking a loan that the customer isn't aware he needed. Suddenly, the customer has a $25,000 line of credit loan. That's what most bankers do. Their loyalty is with their managers and supervisors who give them targets that they have to meet. If they don't meet those targets, they might lose their job. So don't get fooled by their smiles and friendly demeanor. Always be on your guard with your money and never sign up for a loan unless it's something you absolutely need. Number 5. Foreign transaction fees. When you go to another country and spend your vacation there, you've probably heard about foreign transaction fees. Foreign transaction fees is a way for the bank to make money when you travel outside of the United States and make purchases with your credit or debit card through additional charges. Let's say you traveled to another country for a 1-week vacation without knowing about the foreign transaction fees. You spent it on spa massages, food, tours, and all that stuff. Once you return and open your bank statement, you might be shocked to see the amount of dollars spent on just the fees itself. But that doesn't mean you shouldn't go on a vacation. Some credit card programs have you covered in some countries and there will be no additional charges. So make sure to check with your banks because most, if not all, won't disclose this to you because you might be putting your money someplace else and not with them. Number 6. Banks are required by law to return your money in case of hidden charges. You might think that because your money is in the bank doesn't mean that you're safe from any hidden charges that you have no record about. So always check your accounts regularly. In the case that you see a charge that you have no recollection of, notify your bank immediately within 90 days. By law, the bank has to return the money to your account within 48 hours. They may try to delay the process and to make you not file the report, but always remember that you are protected legally and that they are under obligation to give it back. Number 7. Your bank activities are always monitored. Banks have a record of all your financial activities. This means that whatever transaction you make, the moment you swipe your card, they already know it. By law, they are required to report any suspicious activity to the IRS, a policy in place to keep in check suspicious deals like money laundering. Before you deposit or withdraw more than $10,000, always remember that that transaction is reported to the IRS. They may require an audit of your account and ask you for an explanation of why you did that in the first place. They usually ask these 2 questions: if you have paid taxes for these funds and if the transactions are legal. So make sure to not use the money for illegal things. Otherwise, you'll face the consequences. So there you have it. Are you surprised to learn these facts about your money? Or were you already aware? Join the discussion in the comments below. If you enjoyed this video, please click the like button and subscribe. See you guys in the next video.